to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Bhaskar Babu, MD and CEO at Suryoday Small Finance Bank, joining in. Welcome to the show, Mr. Bhaskar. My first question coming to you overall is, how would you describe the third quarter in terms of internal expectations? And clearly, with the way the last 18 to 24 months have been, how have you seen that entire transition?
Post-COVID-2, which happened in April, May, June, things were very volatile in the quarter of July to September. What we saw during the third quarter was large amounts of stability coming in, and the repayments picking up, business kind of momentum picking up, and which is also kind of resulted in our peak of profit of around close to 90 crores, not including the 10 crores of MTM markup that we had to do. So the momentum in terms of operating profit has kind of built up. What this has also done, as I said, this last 18 months more, has clearly kind of differentiated customers even within the inclusive finance segment of a large category, which is around close to 75%, which has been through this challenge, but has been continuing to pay month on month every month, probably including some of the months during the moratorium, which was announced till August of 2020. So the data analytics, when you dig deeper into it, around close to 30% of these customers also have a retail asset rating. Usually in microfinance, we go by the credit bureau, which is a separate one for the microfinance track. But if you combine that with the retail asset track, which is available, the richness of data and the profiling of the customer, which goes beyond in terms of understanding the microfinance customer only by looking at the track record of microfinance, is what we have kind of learned massively in the last 18 to 24 months. And we are wanting to build upon it in terms of existing customer, but various other products, including secured loan products, which is small ticket home loans or small ticket LAP products.
Right. So with all of this, if you see the product offering also that you have is pretty well diversified, say from inclusive financing in terms of affordable micro housing loans, CV loans, business loans, loans to financial intermediary groups as well. So if you have to divide it between that retail bucket, institutional and fee-based, where are you seeing higher traction and where is the growth coming from?
Long annuity products like home loan and micro LAP, it is extremely important that you build your base pretty strong. And then thereafter, with the branch network of around 560 branches we have, of which around 450 branches are full-fledged branches which can start generating these assets. And even if they were to generate around just about say 30-40 lakhs, we're talking about a number which is substantially larger. So the first phase of the build-up was organizational learning in terms of putting all the nuts and bolts. I think currently what we're seeing is around 30 to 40 crores in each of the products. And even if our disbursements continue to be in this range of around say 400, 450 crores, with 300 crores coming in, which is 70% of the business coming in from inclusive finance, 20% from the long tenor products, the portfolio tilts slowly but steadily kind of moves towards 50% in terms of secured loan products. And when you build a secured loan product to an inclusive finance customer, even if you continue to give micro loan and secured loan, it is built with the cross collateral of the core asset, and that makes it far more stronger. I think that will be the way to go. Getting into this year, of all the 16 lakh customers, we have around 10 lakh customers have been excellent. So which means that we have to do more in terms of deepening than only the old strategy in terms of putting more branches, getting more customers. More than just getting new customers, what more can be done in terms of our existing 9.5 lakh customers have been excellent. And even within that, if you dig a little deeper, around close to 3 lakh of them have other track records in terms of retail assets. Could be a two-wheeler loan, could be a home loan, could be a LAP, could be a business loan. All of that combined together, I think our intent is to really work deeper for the 3 lakh customers first, and by and large completed to the digital, because we have their entire gift created, we have their bank account. All we have to do is that, and our low-income households have moved towards digital. But however, it is not necessarily the lady of the household who's the customer. It's the son or the daughter, the GPay or kind of the phone pay. Everybody kind of ubiquitously is using it. So we'll have to tap on that, and instead of just focusing only on the lady of the household, we'll have to just enlarge it at a larger level in the family.
Right. And with all of this, clearly, if you see in terms of the quarter, it has been a turnaround quarter, because in the preceding quarter, we had posted a net loss of around 1.5 to 2 odd crores. Now that we've seen this turnaround, are we expecting this kind of performance to continue?
It's always been a consistent 25 to 30% growth player across the last 10 years, whether it was a smaller base. 1.5 years probably were post demonetization, it would have come down and then one. So what we are really intending to be a good 25 to 35% growth. And our peak of profit even before COVID was around close to 30 crores, which we have now got back. So the momentum had to build up mathematically. What this again, as we guided earlier itself in Q2, that Q3 and Q4 will be the quarters where we'll be providing enough for absorption. And part of the spillover probably will go to Q1, and Q2 onward, we clearly kind of seeing a large good business momentum. And parallelly, what you have done on the other sides is in terms of our cost of funds have moved to sub 7. So currently it's around 6.8%, completely granular in terms of deposits. And we, on that side, having strengthened it, on the asset side, we'll build up with the products 50-50. And when you are GNPA is around 10.5% or 90 plus, it is only around sub 5%, just around 5%. So if this divergence shows that even if the customer is in GNPA are paying customers, around close to 40% of them are paying, we are tending towards 50%, which is reflected on only 5% of the overall portfolio being in 90 plus.
Right. And overall, we've seen a good reduction in terms of where cost of funds is concerned, on the back of which, if we see the cost to income ratio has moderated to 56.6%. Are we expected to see any further improvement on that front?
Target has been sub 50, which even as we are converting into a bank, we are kind of far lower than the 50% mark compared to kind of a benchmark across SMBs, and our intent is to really take it to that mark first, that is sub 50. And thereafter we'll kind of reset again all over. But at this point of time, the focus is in taking to sub 50.
Right. And overall, if you see in terms of where, the SLTRO is concerned, we've seen a drawdown of almost 750 crores for 3 years tenure at 4% per annum. By how much will this help us reduce our cost of borrowing going ahead?
Hey, hi, good morning. So, see, the effect of the SLTRO has already come in. What we expect is that our costs of funds will be somewhere in the range of 6.5% to 7% going forward.
Okay. And from here on, what is the roadmap expected to look like in terms of transformation and business strategy?
In terms of the overall, we have said that we are focusing on the 3 lakh customers, excellent customers, both COVID 1, 2 paid every month, and they happen to be from concentrated around close to 50,000 centers. So they are our customers, they have our bank account, they kind of draw money through the AEPS network. So we kind of want to really do everything completely digital. Go into the app, open, and then you take your account. What COVID one side, where it has had negative impact, the positive fallout of that has been we started now dealing with the customers almost on a one-on-one basis. So when you start dealing with the customer on a one-on-one basis without necessarily the shield of group, it still continues from an operational convenience factor as well as in terms of cost management. But I think insights into the customer one-on-one can be completely done, and you'll have to cross that line. So usually earlier it would have been that don't fix what is not broken, but this challenge has really thrown that here. This is your first 3 lakh sets of customers who have got kind of excellent track record, not just with us. They have good track record outside. They are current across the board. So can we really do it where without a touch, we kind of still meet them from a relationship management point of view, but not from collections, not from even disbursement. So the first pool of around 10,000 customers where we have done under the scheme called Vikas Loans, the repayment is coming completely to our bank account. So we don't really collect cash at all. So we kind of make sure that this 10,000, whatever we did, can we take it to 1 lakh? When you take it to 1 lakh and 3 lakh, what it will do is that it will do a couple of things. One, your cost substantially comes down. It inculcates a behavior of customer on their own are paying on a month-on-month basis. And kind of including events like this, you will still have a direct rapport with the customer and you'll be able to manage it better. That's what we're strategically looking at, and build quite a bit of an asset products, acute asset products for these customers first. Two-wheeler.
Yeah, go on.
Yeah, all the products, including small home loans. Because in smaller home loans, even affordable home loan companies are moved to the ticket size of 10 lakh to 12 lakh. Because it's extremely expensive to locate a customer who needs a 4 to 5 lakh rupees or 6 lakh rupees of home loan. And that you already have the customer base, it becomes a lot more easier. And that space has got vacated even the affordable home loan companies. Today, you won't have many players for focusing on the 4 to 10 lakh segment. And it will not be viable at all for somebody to find out who needs it 4 to 10 lakhs. They usually go to cooperative societies or cooperative banks or public sector banks. That will be a sweet spot for us.
Right. So overall, if you see, we've mentioned that from the second quarter of 2023 onwards, we're targeting 400 crore of new business. What segments is this going to actually come from?
The run rate is 400 crores. So we're kind of guiding that will be higher next year. We said that 20%. Likely that will be in the 500 crore plus range in terms of disbursements. Around closer to, we are going to just extrapolate what we are doing now. Around close to 350 crores will come in from the inclusive finance segment. More focus in terms of existing excellent customers, and the remaining 150 crores will come from various products, which will be predominantly driven by home loan and the secure business loan, which is against the collateral of the property. That could be in the range of around 75 crores. Another 50 to 25 crores will come from commercial vehicle. The portfolio is stabilized. We kind of de-grown a little bit and then stabilized it. So that we are around 25 crores of commercial vehicle, around 60 to 75 crores of home loans and small ticket loans. And the balance will be in terms of various partnerships that we have in terms of the fintech side. Probably around 20 to 30 crores.
Right. And in terms of expansion, in terms of geographies, what is it that, how are we looking at it currently? What's the concentration? And say from 12 to 18 months from now, how are we looking at it?
We have spread out quite a bit of the infrastructure we have put. We have got around 564 branches, converting quite a few of the branches in what we call as composite branches, which means they can also start focusing on deposit mobilization, expanding the BC network, CSP network substantially. We rolled out a product where you can go take them and go subscribe to an FD of us as low as 1,000 rupees. You can open an FD for 1,000 rupees, walking into any CSP, and we are committing that will be done in 100 seconds. Not even our customers. So that we'll see we'll see traction in terms of banking where it will go beyond branches. Branches will be the fulcrum of trust factor and servicing, but their entire distribution network need not necessarily be built only through our ecosystem. Which is where, right in the beginning, we never had bank branches which are very large, around 800, 900 square feet. We never wanted to really put our own ATMs. There are across everywhere. It's better to kind of pay it rather than maintain yourself. So similarly, kind of the banking, the way it kind of move is that it will require to kind of put in one or two branches in towns and cities purely as kind of a trust point that we are there and for visibility and branding. The remaining will be done through the distributed network.
Right. And overall, in terms of expansion, you are enhancing your digital footprint as well. What is it looking like in terms of digital transactions? At what growth is it growing? And what part of our, deposits, income, transactions come from digital?
85% to 90% of all our transactions happen through the digital channels. What is heartening to see, including our inclusive finance customers, have started transacting through the UPI mode. And that's kind of the number is increasing substantially in line with whatever we are seeing on the overall UPI transactions itself across. So when this starts happening at the household level, so the digital kind of reach becomes very, very easy. And because there is what is in it for it, what is in it for me? When the customer asks, it's far more convenient. We don't necessarily now need to meet the customer every time to give a loan. We pre-approve and put it. The customer will press, I need 20,000 rupees, pre-approved is say 40,000 rupees in terms of what the EMI is. And the customer gives a consent and our account gets created. And this is where we started our small ticket OD product for around 3 lakh customers. And that was at the peak of COVID. We said that no, we have your back. We will kind of give you a limit, don't need to worry. But the experience per se, while it has been good, we kind of did not really execute in terms of meeting up the customer and kind of expanding. We restart some of those, which will extremely be useful in terms of not just increasing the customer, but increasing the stickiness. So we kind of invested, right, just after COVID, 10 crore in a very large data analytics platform. So which gives for big data, it gives a visibility. Else it was doing in Excel or in a smaller platform. Did not really give us a visibility of what the customers are and which other customers we can really go to deepen it and make it far more convenient. So I think a combination of a digital and analytics quietly is kind of playing out, and we are transitioning to a new system Finacle. When you are going kind of into the new system and kind of with this capabilities in terms of, I would say, digital is being driven by analytics. And when we had a large kind of a viewpoint in terms of customer, we did not have an in-depth view in terms of all of the trend lines, and it was very, very difficult to combine. So our focus would be in terms of doing that.
Right. And very lastly, in terms of the sentiment on the ground, how are you seeing that improve, taking into consideration, because even the collection efficiency is improving. So are we seeing that sentiment on the ground improve as well overall in terms of taking loans, in terms of repaying everything? How is that looking like?
COVID was a classic example. While that kind of did disturb, kind of putting around 10% of our employees in the corporate office were affected, and similarly kind of along the field. But what really it reflected is that the entire, I would say, if at all a mini disturbance was for a period of 7 to 10 days. Around 7th and 8th of January to around 16th of January. All that was back, and then we go quickly post that. So if this were to be kind of undertaken, specifically we go to towns and smaller cities. The negative sentiments of COVID is broadly gone. What certainly has done, it has probably taken out the savings which the customers had, and hence they have to recoup, and hence the confidence building will take a little more, a couple of months. But both from a business momentum as from a collection, I would not think that any reasonable percentage of customers today are citing COVID as a reason for non-repayment. So if I have to kind of look at it, it has been pretty positive. Barring anything unforeseen in terms of a large impact in COVID-4, these are back to normal.
Right. So overall, it seems to be a good roadmap going ahead as well. And once again, congratulations for a spectacular quarter, for seeing that break even. Good luck for the coming quarters as well. Take care, stay safe, and speak to you soon again. Thank you.
Thanks.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.